Good morning, good afternoon, good night. Welcome back. Welcome to. My name is Joe Josh. I go by iChart Daily. It is January 8th, 2025. Happy New Year. Happy holidays. I haven't spoken to you in a while. And the reason being is nothing has happened, cuzzies. Literally since November, right? I mean, Thanksgiving, when I made that video. This is how long sometimes tops take to play out, right? We haven't broken 91, and technically we really haven't broken 99, right? So I haven't had an urge to make a video, but I do see some things playing out in the charts, some confirmations, right? So, and I want to present them to you. So first things first, this is not financial advice. This is for educational purposes only. This is a window to my thought process on hypotheticals that I might be doing with my own money. I have been doing technical analysis for 17, 18 years now. I was originally taught by my father, who was an options trader for 30 years and worked for Stratton Oakmont. No, he did nothing illegal. I've been hypothetically invested in trading crypto for 11 years now. I have experienced multiple halvenings, multiple cycles, and I have formed thick skin to the BS. The news doesn't persuade me anymore. I now trust charts over people because multiple times I was burned in the past 18 years, and the chart didn't lie. And what I mean by that is there's certain things that I see in a chart that automatically tell me there's bearish momentum coming or bullish momentum coming. There's certain rules that I follow so that regardless of the ticker that I'm looking at, I don't change my technical analysis based off of if there's bullish news coming out. Meaning, if the charts are telling me that there's something bad coming in the horizon where price action might come down, but there's positive news on CNBC or this and that, and people are talking about a certain project that you're charting, I'm trusting the charts first. Okay? So, there's first things first. I am a swing trader at this point in my life. I don't day trade anymore. It's very stressful. You actually spend more time in front of the computer watching the chart for hours upon hours because you have to make sure your play is perfectly aligned compared to just buying at 50 to 55,000, longing it to 100,000 and taking 90% profit and leaving 10% for the masses right now, right? Confirming that we went from oversold to overbought to oversold to overbought, and now there's certain things playing out in the chart that are showing me like we need to prepare. And what do I need? What do I mean prepare, right? So Bitcoin for the past 12, 13 years has been going up and to the right. So all we're looking to do, all we're looking to do is get the best value for the amount of money that we're putting in, right? Meaning, yeah, if you bought at 1100 or 200, you're still up a lot of money, but you're still wanted to catch it around the bottom, right? You could have taken profit from literally 10,000 to 20,000, but you want to take it closer to the top, right? You could have a dollar cost average anywhere from literally 5,000 down to 3,000, and you would have made money up to 14. That's what I'm talking about, right? I've been telling my channel and my followers, my friends, my family since 17.5, 15.5, 13.5 that Bitcoin was a good time to buy. Now that the asset is up 3, 4, 500%, right? You should be thinking more, what level should I be taking profit, right? So if you have new money, this is not financial advice, you need to understand your risk reward, meaning where is local support just in case it was to dip down. The first thing that I've noticed, and I've been saying for literally two and a half months now, if you go to the Bitcoin CME futures chart, there is a gap on the weekly chart, not the daily, not the 1 hour, not the 5 minute, the weekly. When you back test this and you see gaps, which means the stock market closed, but meanwhile Bitcoin's trading at 24 hours. So it closed at 61 and opened at 64. Eventually, this price gap was filled in the future price. There's a gap from 81,000 to about 78,000. My opinion, just look at the weekly chart, and every time you've seen a gap, it sometimes takes a month or two, sometimes it takes a long time. I mean, there was a gap from 39,000 down to 37,000. This took 280 days for this market structure to form. So, do I know when? Not necessarily. I'll give you like an idea of how I know when to figure out when the next candle or blood could print, which might bring the next flow of bearish momentum in. It's the 2-week. Right now, I'm waiting for confirmations to play out, meaning did the 1-week death cross? Then the 1-week break the 70 line? Okay. There's 4 sections. There's section A plus, A, B, B minus. Okay. There's three different types of support. Your asset could be here and bouncing off the 70, very bullish, right? So overbought here, oversold here, bouncing here, goes back up, making higher highs. Your asset goes from 70, breaks, goes back down to 50. That's your next support level, the 50. Still remains bullish if you're in section A. When you break section A and you go into section B, not my opinion, just look at price action, you tend to break support and make lower lows, right? 63,000, 56,000, 52,000. Once you started making higher highs and broke back into section A and continued making higher highs, then we went from 52 to 54 to 60 to 67. So as of right now, just based off of that simple lesson that I just taught you, we have broken market structure, right? We were now making lower highs. We broke the 70, showing me that we have room to bleed to the next support line. Your next support line is the 70. The next line in the sand could have been this support here at the moving average, showing me that we had just a little fake out. Sometimes you have a fake out to the downside and then you come right back in. So the next chart that shows me a confirmation is this right here. I want you to understand this is a confirmation market structure pattern. When you officially break back into the 70 and then you use the 70 as resistance, it's a confirmation that more blood potentially could be coming to the downside, and we potentially could now break the moving average and head back to this 50 line, which would be extremely oversold, right? So as of right now, we still have 9 days, 8 hours for this candle to finish and then the next one to print. So we have a little bit over a week to see if we are officially going to break the 91,000 or not. Now, how did I come up with 91,000? Let's zoom in. You could clearly see on the daily. I'll delete everything. So we went from 67,000 all the way up. We formed the symmetrical triangle, right? We did something like this. The symmetrical triangle broke up. We went to 99,000. We officially came down, right? We went up. We had this wick come down. We now have a double bottom at 91.8. What was previous resistance at this 91.8, 99, 91.9 level, right? It's a range, right? I can't be exact and give you the exact penny, but I could give you a range, right? I could give you from 92.4 to 90,001. I was telling my friend who does day trade, this is where you want to be opening up your longs, 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 and then taking profit where you have seen previous resistance in the past at 99 to 100,000. I mean, you can clearly see once this formed, it was like, take profits on your longs, done, right? This is considered a fake out. Once you come back into a trend, the trend is sideways right now. Once you come back into the trend right here, this is once again called a confirmation, like a very high probability of this going back to here, and it did. And went once, went back up, again, take profit on your long, come back down, take profit on your short, take profit on your long, take profit on your short. This move right here is called a long squeeze. There's a short squeeze, which are basically these right here, where everyone thought we were going to break 91,000 and we popped back up. Most people would have had their stop losses around here, and since we broke that, all those shorts were liquidated. Right here is a long squeeze. Everyone thought we were going to go higher. We got liquidated, came back into the trend. Right here, everyone thought we were going to go lower, the trend changed. So as of right now, we are at this line in the sand. You can see where we've had support in the past at 94,536. If we were to stop here, there's a potential of us to go back to the 99,994 or even this little fake out area of the 102,000. The most important thing that happened, and I was explaining this to someone literally about a week or two ago, is we didn't see the next high yet. Okay? I need to see market structure so that I could draw a trend line. If the chart looks like this, I don't know where the next high is. So as of right now, since we did have this swing high up to the 108, we came down, we double bottomed, we went back up. The most important thing is we did not retest and we made a lower high. This fuels the bearish divergence. Bearish divergence is when your indicators are telling you one thing, like we're going down, right? So price action has been going sideways, technically, right? From 99 to 100,000, but your indicators are now showing you bearish signs. What did I just tell you about breaking the 70, breaking the market structure, making a lower high resistance? That's bearish. MACD, this is a trend indicator, right? If the trend's going up, you're going up. If you're above the histogram in section A and you're going down, you have a very high probability of actually staying flat, meaning not breaking the most recent low and going sideways. Once you break the histogram or the zero line, that's when you're going to break market structure, right? You can see here, we did not break 47,000 until right here. Once the lines went below the zero line, we broke support of 47 and we went down. So as of right now, we are coming down and we could have weeks of just sideways, right? Just weeks of sideways and coming down, or days of sideways and coming down. And eventually we come back to, like I said, the CME gap of 85 to 75,000. We fill it and we still remain very bullish, right? Because you have to understand, we went from 15,000 low to 30,000 high. New higher low of 25,000 compared to this one, right? New high of 49,000. New low of 40,000. New high of 71,000. New low of 50 to 55,000. New high 108,000. If we come down, right, and retest this support and then fill the gap, we have a new higher low at 76,000, whatever it is, which shows us that, we're having a new president here in the States. Last time he was in, the market was more bullish than bearish. One thing I do want to tell you is stay level-headed, even during someone who a lot of people don't like right now, BIDEN. Bitcoin still went from 15,000 to 100,000. Okay, I have a PDF file that I got from my cousin who was a financial advisor for literally almost 35 years, and it's very simple, right? You cannot fight with math. 5 plus 5 is 10, regardless of your race, sex, pronouns, or religion. If I show you charts of every single president, regardless if they were blue or red, and their impact on the market, it's like almost the same. It's like a 48-52 that the market usually went up to the right. So, yes, I'm happy everyone's bullish and he's going to change this and tax and blah, 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 and America, America, America. It's great. I love it. Stay level-headed, meaning I'm using the charts to understand once I start seeing bearish divergence on the monthly, market top. We're not there yet, okay? We are not there yet. There's one simple chart that I have used for almost 11 years now, and it's an RSI on the monthly. I like to use longer time frames because there's less fake outs. What does that mean? Once I saw a bullish crossover or a bearish crossover or a bullish crossover or a bearish crossover, it was the bottom and top of the market. Okay? As of right now, we're on a little bit of thin ice because we have made a lower high, but we did make a higher low. So I'm trying to see if this is the next low, and we have room to grow. So how do you figure out resistance? Well, you need about three touch points to make a trend line. So there is my RSI monthly trend line to figure out where the local top will probably be. Now, we're here. We're at 70. The only touch point that I could see is this one right here, around 80 to 85, which was support, which will probably turn into resistance in the future. So we have this right here until I could probably say, listen guys, we're at a point in history where it was the best time to potentially take profit on your assets in crypto. Because after that, not my opinion, right? Bitcoin went from 1100 to 200. Bitcoin went from 20,000 to 3,000. Bitcoin went from 70,000 to 15,000. Bitcoin will go from 150,000, 170,000 to whatever, to 60,000, right? It's usually a 60 to 80% consolidation. I'm just curious if we were to take from here. Okay, that didn't work. There we go. We'll do this from here to here. This is good old Fibby Fibs. So I took from the high of, took from the high of 70 something thousand, brought it down to the low of 15,000. The next 2.618 is 158,000. If we were to break this key level of 1.618, which is like the 110 level, let's just say, there will be an area here of 125, and then the next one will be 150. So if we're lining up the 125 and the 150 with the RSI being at that point over here, I'm going to be like, you know, I don't care what Michael Saylor says. I don't care what this one says. I don't care what trust is coming out, what government, what country, what this and that, because it didn't matter in the past. Okay? Love you guys. Appreciate the support. Indicator, that will be the next video. Basically, in a nutshell. Oh, one other thing. Set an alert here at like 92,000, and I would set an alert here at 90,000. If we break 90,000, poo-poo's hitting the fan. We're going to about 85,000, and then probably filling the gap to about 70,000, 75,000. Indicator, I will make a video on it. Basically, it's the ability to give people who don't know how to trade a visual of either bullish or bearish momentum, if we're overbought, oversold, if there's massive amounts of buying pressure or selling pressure coming in. And I like to use it on longer time frames. I'm trying to find someone that could help me now figure out how to fund an account and just have like an AI bot use it to either long or short, take profit, etc., and just takes people out of the equation and does it based off of what the indicator is telling it, meaning long here, add more to the position, sell position, open short, sell short, take profit when candles go hollow. Once again, open long, take profit when candles turn white, when there's major selling pressure coming in, etc., etc. So, love you guys. Appreciate the support. Any comments, questions, concerns, leave it in the comments section. If you have any requests, leave it in the comments section. I will be doing one request next video. Enjoy.